Welcome back to Morning Trade Live. It's time to go inside out on Palantir ahead of the earnings that are due out this afternoon. Joining me right now, Adam Coons, Co-Chief Investment Officer, Winthrop Capital Management. Thank you for being here. Palantir is back in the good graces of shareholders lately with some nice moves. What are you expecting right now today?
Yeah, definitely the stock that seems to be able to do no wrong. So just to start with, option markets are pricing in roughly a 13% move the last time I looked at it. So I would say that that's probably fairly in line. But if I were taking a neutral bet on it with like a straddle or something, I would probably say that it's probably going to be larger than 13%. The reason for that really is just a lot of the things that are weighing on stocks right now, we see as a benefit for Palantir. When you look at if a company is cutting back because margins are becoming stretched through tariffs or other costs, I think an AI software that optimizes is probably not going to be the place you're going to cut. So that's kind of the first thing we're looking at. Is we probably think this is going to be a better than expected and probably better than expected on the forecast going forward.
And that would really be bucking the trend of late. I mean, I think we've had some beats and such, but if we can get a move here you said that options markets are pricing in 13% move. Imagine we get a move that could be more than 13% to the upside. That would be something different, right, than what we've been seeing. I mean, you've been seeing some beats on the street, but you're not necessarily seeing that many stocks jumping 20% up on earnings.
Totally agree. Yeah, previous to this earnings season, we were kind of getting used to those big jumps, right? And so you could see even these trillion-dollar companies have a double-digit day at post-earnings. So I think a lot of that is based off of the uncertainty. You're just not really seeing companies take a bold stance through the earnings. So that doesn't really surprise me that we haven't seen it so far. But when you look at Palantir, I mean, their moves have been much greater than 13% historically. So I'm surprised that option markets are suppressing it that much, but it probably plays into what you just said. So I think that lends us towards a potential surprise here. Like I said, especially because if you are paying attention to the narrative, if there's more spending in areas that are AI based within defense, even through some of the DOGE initiatives, you would expect that the shift would be cost cutting in some more manual areas and shifting that towards AI. That's obviously probably a Musk initiative. So we think those kind of things are what are going to potentially lead to a surprise here. But the obviousness is that you can't ignore the valuation.
Yeah, well, that's the whole thing, the valuation. I mean, when you look at this name, 6 months, let's see, up 181%. 1 year, 454%. But it did drop off and make its way back, right? So when you think about where it really should be fairly valued, is there any sort of clear picture or base case for you?
Unfortunately not. You hear a lot of guys put price targets on a stock like this, and they'll be astronomical. I think really what you're following here is momentum. The problem with valuation is not. I don't think valuation is the reason that a stock is going to go down. What a stretch valuation like this does is it lends towards, if there is a surprise to the negative, it can be very detrimental to the stock. And so this is just a stock that just comes with a lot of volatility. And I think if you're an investor, you understand that and you position accordingly. That shouldn't give you heartburn. Only if you're overexposed to a name with this kind of volatility should that happen. But yeah, look, I think that this is a company that the actual business trajectory is going in a phenomenal direction. It's a strong business with a strong product that's going to have increasing demand. It is hard to put it around, when you've got a company trading at 25 times revenue, that's kind of unheard of. So it's tough to put some specific numbers when it comes to valuation. This is one of those where you really have to pay attention to the business momentum and the stock momentum. That does work. You just have to be quick if it turns course, that you want to get out of the stock as quick as possible if for some reason that business momentum does wane.
So Dan Ives, who is been bullish on this name and has been right with it, he still continues to talk this name up and saying it's the missing piece of the puzzle when it comes to AI. He has belief in CEO Alex Karp, and so thinks we'll hear some good news later. What do you think overall the software names as the next phase of AI is coming on? Do you have certain names that you don't have to share them, but how do you feel, are there names that you really do like in this group because you believe in what's happening here, or does it feel more like a wait and see trade?
No, I mean, I think this is a trade you want to be in on. I think you need to pick your spots, absolutely. And we've done that more thematically. And so we really like the cybersecurity space. So a name like Fortinet is a name that we like when we're trying to really target the AI theme, because obviously as AI becomes more advanced, the need for more advanced cybersecurity grows with that. So we really like the overall cybersecurity space in general. And then on the flip side of that, we're kind of barbelling it with the bigger names. You'll hear the terms hyperscaler and those kind of things, but it really, the companies that AI is just going to help current business models. And that's really how we're trying to play it with your Microsofts, your Google, Alphabets, because we think that the business models that they have are sound, and what AI is going to do is just kind of extend that cycle. In the middle of that, picking the individual software names, for us, that's really difficult right now. There's obviously going to be some tremendous winners, but there will be some losers. And so for us, we think this is still very early innings, so we'd rather play, like I said, those more specific themes than getting into trying to pick the exact right software.
And I'm looking at Fortinet too. That's not too shabby either. What a great performance. This name in 1 month up 20%, but the 1 year is up nearly 70%. So that's a good name to watch as well. And thank you for your thoughts on Palantir as we await that later in the day. Thank you, Adam Coons, Winthrop Capital Management. Good to see you, Adam. Thank you. We want to trade this name now. Tom White is here, host of Fast Market, and you have a couple of trades that you're looking at. Good morning to you, Tom. I think you have a bullish example first.
Yeah, we're going to look at implied volatility levels. As your guest mentioned, I mean, plus or minus over $16 move either way in the shares, over 13%. This is expected to be a market mover here. So I looked at vol dispersion here between the near-term implied volatility levels, which are really elevated due to the event risk with the earnings coming out. And then maybe buying something a little bit cheaper as far as implied volatility levels. So looked at our bullish call diagonal in here. This is really short-term positioning, going out to the May 16th monthly options and buying the at-the-money 124 strike calls. And then against it in the near-term May 9th weekly options that expire in just 4 days, we're going to capture that earnings event, sell the 135 strike call. So basically, an $11 wide bullish call diagonal. You're going to pay roughly about a $5.20 debit for it. So it's less than half the width of this $11 wide call diagonal. And why is that? Well, it's that vol dispersion that I mentioned where you're buying about 118, 119% implied volatility in the May 16th, the 124 strike call on aggregate, and then selling in the near term that May 9th 135 call that you're selling. That's about 168% implied volatility. So that dispersion lowers the entry point price on this. If you pay that $5.20 debit, anything above about 126 to the upside is going to be potential profitability. That's only about 2% above the current share price in this name. So that vol dispersion lowering the price entry point, but this is definitely bullish. We're going to need a move to the upside, but that move to the break even is well within that one standard deviation move that the option market's pricing in on this particular strategy.
Yeah, and it'll be interesting to see how this trades because he was talking about the 13% options market bet, but that it could move more than that. There are even those bears out there who have to cover if it starts moving higher and higher. So there's a lot to this. Now, you do have a bearish example trade as well.
Yeah, a little bit more conservative, neutral to bearish type of stance. You got to remember the RSI with this stock up, over 60% so far this year and up over 400% over the last 12 months. RSI is above 70, so that means overbought on a technical level. So I looked at a strategy that once again takes advantage of that higher implied volatility levels, but I'm going to sell an upside neutral to bearish call vertical where I still have a big cushion to the upside. before you start getting hurt on this type of example. Going out to the May 9th weekly options, so just 4 days to expiration. We're going to sell the 135 strike call and then against it, because we want to stay risk defined because the stock can move post earnings, by the 140 strike call. So a short $5 wide, neutral to bearish, call vertical. You're collecting roughly about $1.20 credit on it. That's what you can make, $120 per spread. But it takes your break even all the way up to 136.20 over the next 4 days. That's about 10.5%, 10% above the current share price in there. So you got that cushion where, hey, I can still profit, take advantage of this high implied volatility where I'm going to collect more option premium. If the stock goes lower, I profit, stays here, I profit, or if it goes higher but remains below that 136.20 level, I can be profitable on this type of trade. It's a little bit more contrarian, but if you think this stock's maybe overbought at this point, maybe it's going to pull back, or at least maybe it won't go above 135. This strategy works out.
I mean, they've had a couple of pieces of really good news lately, which is obviously has helped the stock. It's not too far away from all-time highs, and actually hit that over the weekend in the overnight trade. But today with the down arrow, not seeing that. But you know, I saw the Titan systems for the U.S. Army, the deal, the partnership with the NATO ops, and how they can provide the AI military technology. I mean, it's something special, something standout. So just that alone, they've already got a nice feather in the cap with those two pieces of news. And as you know, Dan Ives really hot on this name. So we'll have to see. Hard to say which way it goes. Good for that you had both trades for us, Tom. Thank you, Tom White.
Thanks.